The altcoin market has been struggling recently, and in this sea of red, there is Ondo Finance hiding in the corner. The question is, does it make sense to buy now when everything is selling off? In the end, crypto is all about buying low and selling high, and maybe there's a hidden opportunity here for Ondo Finance. As usual, let's have a look at the on-chain data. The data most people aren't looking at. Let's try to figure out at what particular price point is Ondo Finance cheap versus expensive, and where are we right now. Now, this is not the first video on Ondo Finance on this channel. I've published several videos in the past. And it's interesting that most of those Ondo Finance videos tend to get more views than the average video on this channel. The average video is indicated in this gray area, and the particular video on Ondo Finance is the blue line. So in general, we tend to see a lot of attention on the asset. And this might be for good reason, because over time, the total value locked is increasing, as in there's more and more capital on the platform. Ondo Finance TVL is now at 1.4 billion, and this is comparatively steady growth. On chain, we've got 185,000 holders that hold at least some part of the Ondo token. And the on-chain data actually looks quite promising. So on the left side, we see the number of retail investors. On the right side, we see the number of whale investors. The way we make this distinction is by looking at how many Ondo tokens are held in a particular wallet. To be counted for the chart on the left, a wallet has to hold at least 1,000 Ondo tokens. To be counted in the middle, it's a minimum holding of 10,000 tokens. To be counted on the right, it's 100,000 tokens. Now, since Ondo is now close to $1, those number of tokens also equate roughly the US dollar amount. We can see very constant accumulation by the retail investor, slightly less constant by the medium-sized retail investor. And yes, the whales did in the second half of last year sell some Ondo, but then very quickly changed their mind again and are close to all-time highs. There are almost 800 wallets now that hold at least 100,000 Ondo tokens. Now, when the accumulation is so constant, it begs the question why the price is actually quite volatile. Yes, over time it tends to increase, but there are crashes all the way from $2 down to 72 cents. Now, the problem, of course, with charts like this is that we do have the general macro impact, as in when Bitcoin and Ethereum is going down, then very often the altcoins go down with it. So let's have a look at relative valuation charts. How is Ondo Finance doing relative to Ethereum? Because Ondo Finance is listed on the Ethereum chain. Here is that chart. This is Ondo relative to ETH. And up until the end of April of this year, we saw Ondo Finance outperform Ethereum quite nicely and quite constantly by more than 700%. But something has happened in the last few weeks. Ondo Finance suddenly starts to underperform Ethereum quite consistently, already by 64%. This is a trend reversal we can only see on the Ethereum-based chart. We don't really see this on the US dollar chart. Now, there's a case to be made that maybe this comparison is not fair, because even though Ondo Finance is on the Ethereum chain, we have seen Ethereum outperform the vast majority of altcoins recently because of the Ethereum treasury story. Right, there are now treasury companies like Tom Lee's BitMine that continue to buy Ethereum, that continue to push up the Ethereum price, also increase the Ethereum dominance. And because of those purchases, plus the exchange trader funds, Ethereum is doing very, very well recently. So maybe Ondo relative to Ethereum is not a fair comparison. Maybe a better comparison is to look at Ondo Finance price relative to other altcoins. This is now Ondo divided by the others market cap. Others means all the altcoins that are not in the top 10. And finally, we get a clear picture. We get a real trading range where the tops align and where the bottoms align. It's a much clearer picture than the US dollar chart. And this tells an interesting story. Yes, we did underperform recently, but we might be very close to the potential support. So the risk of maybe 2% versus the potential reward of an outperformance versus the rest of the altcoin market of 73% does not look bad at all. Now, I don't know if those arbitrary lines that are drawn in the sand will hold, but it is a potential interesting trade, right? One can go long Ondo, or one can simply buy Ondo, maybe with leverage, maybe without, and then set a very tight stop loss. So if the support gets broken for whatever reason, that's fine, we haven't lost much. But if the trading range prevails, the upside is massive. Ondo Finance tends to be rather cheap now relative to to the other altcoins. Yes, of course, there's always a sword of Damocles hanging above the Ondo token. That's the token inflation, as in there's more and more tokens hitting the market. Every year there's an unlock. And maybe that's part of the sell pressure that we see recently. We didn't see a lot of sell pressure at the exact point in time when the unlock happened, but maybe now some of the allocation from the private sales and the protocol development gets now sold off. So that's the risk. That's a potential reason why we might not turn around here. But in general, this chart looks very much inviting. The question, of course, is always about the upside. How much could Ondo Finance potentially outperform? And yes, versus the other altcoins, it's maybe 70%. But within the real world asset category, we don't really have a comparison. Yes, there is Chainlink and Stellar, but both of those assets are no clear RWA plays. And they're simply next the Ondo token with 2.8 billion in market cap. The price discovery for Ondo happens both on the spot market and on the bets on the price on the perpetual futures market. There's not too much activity recently. So in the last 24 hours, we saw 37 million worth of trading volume on Binance on the spot market. And on the perpetual futures market, we saw 22 million worth of trading volume. So really not that much. Most perp traders are betting on rising prices. So the longs have to pay the shorts. There is a positive financing rate. And of course, there is some correlation between the open interest and the spot price. As in, if there's more open interest, if there's more bets on the price, the spot price tends to be high. As there are less bets on the price, the spot price tends to be low. And currently we are not necessarily low, as in there's roughly 400 million worth of bets on Ondo Finance. Relative to the market cap though of 2.8 billion, that's not too bad. So there's definitely more room to grow for open interest potentially. Yes, we could deflate back to our 100 to 200 million range. Yes, there is some risk, but trading volume isn't particularly high and liquidations mainly happen on the long side. And again, that's because recently Ondo Finance underperformed the rest of the altcoin market. And the big question is, are we going to see this critical turnaround? It all rests upon this chart. If we don't hold, then we are likely going to continue to see Ondo Finance underperform Ethereum. And likely that's due to selling in the background, gradual selling from the insiders. Now, fundamentally, there are two ways to make money with investing. The first way is to just bet on long-term adoption and to bet on monetary debasement. So that's the idea of dollar cost averaging, right? We buy into Bitcoin all the time. We just bet on the long-term growth chart. For example, had you bought $1,000 worth of Bitcoin every month for the last 5 years, so you held Bitcoin for more than a single cycle, then you'd now have $213,000 worth of BTC, and you outperformed the S&P 500 and the gold market by more than 2x. The reason why such an approach works is because more and more capital long-term flows into the asset. So more people buy the asset without the intention of selling it. More and more people just buy the asset in order to preserve purchasing power. This works with Bitcoin. It also works with the property market. It also works with the stock market. People don't necessarily buy those assets in order to flip them quickly. So have a look at the number of wallets that own at least one Bitcoin. This tended to go up long term. This growth has stopped to a degree 2 years ago, but now we've got Wall Street that instead buys the Bitcoin. So there's still long-term adoption and thus Bitcoin price appreciation. The treasury companies, they never sell, and the ETFs also rarely sell. There's only very few instances where we see net selling. We really have to zoom in to see those kind of events. So that's approach number one, right? We bet on adoption, we bet on further capital accumulation, but then there's also approach number two, and that's trying to beat the market, right? It's trying to buy low and sell high, and effectively what we're doing there is we're taking money away from the person that's not able to time the market as well in order to get outperformance. So if you want to get more performance than the average investor, we effectively taking it away from the investor that doesn't really know what they're doing. So let's say we are using tools like the realized price, right? The average cost basis of the market, and we buy much more Bitcoin whenever the current price is below that realized price. Then of course we are buying when everybody is very skeptical about crypto and Bitcoin. We are in a way doing a contrarian bet. Nobody wants to buy Bitcoin, so we do. The same is true when Bitcoin is high, right? For example, here, the CBBI indicator, we want to sell when this is rather high, when everybody is hyped about Bitcoin, when everybody thinks that Bitcoin will go to the moon, and the rally accelerates that's when we want to potentially exit. We are not yet at those extremely high levels. But again, we always want to do the opposite of what most other people are doing. Because that's the way to make money in crypto, right? The minority is able to beat the masses. The masses tend to do the wrong things. Only the people that do the opposite of what most other people do, they accumulate above average returns. If you do a 2x on top of just buying and holding Bitcoin, then you basically took all the money away from somebody else, or you took 50% away from 2 other people. You get the gist. And so that's why I like the crypto market. And that's why I don't speculate, for example, on the currency market, because the currency market is extremely efficient. It's got all kinds of quants and hedge funds working for it. It's a very large market. It's incredibly hard to beat. When we are taking money away from the people that aren't as smart in the market, we're basically seeing all the other market participants as competitors. And we want to have very weak competition, not strong competition. We don't want to have the Einstein hedge funds as our competition. That's why the currency markets are very poor for active speculation for the average person. And the same could be said potentially for the stock market, right? The stock market also tends to be somewhat efficient. Before my time in crypto, many years ago, I was actually a professional poker player. I paid my study fees, my private tuition with the earnings from poker. I lived from poker several years. I used to live in Gibraltar at the time. With poker, I learned that it's not just the skills that matter. It's not just about calculating probabilities and reading tells, etc. It's also about who you're sitting with at the table. If the table is only made out of sharks, it's only made out of other professional players, then there's no money to be made. But if you're sitting at the table where all the other players are just beginners, then you don't need that much skill in order to beat the game, in order to make money. And it's the same concept here for speculation. If we want to outperform the average investor, we better participate in assets and in markets where we're mainly sitting at the table with fish, not with shark, right? We want to be in a soft market, in an inefficient market. And so here is where I see the inefficiency in crypto. Crypto as a whole is already comparatively inefficient, at least in relation to the currency market or to the stock market. But really, the main inefficiency comes from token dilution. For example, have a look at this. The Ape token has a lot of token dilution. Here is the number of Ape tokens over time. 3 years ago, this was at 284 million. Now it's at 908 million. There's all of those new tokens that get issued all the time that goes to the insiders and to the team and to early investors, etc. They get new tokens and they dump those tokens on the market. And this is not a new concept I'm talking about just recently. I even talked about this specifically for the Ape token just a few months ago. Have a look at this video. How solid is the Memecoin rally? This was published 9 months ago on the 22nd of October. At the time, the price was at $1.57. And here we are today at 63 cents. We had a massive rally in the Ape price at the time, but relative to Bitcoin, Ape went down massively afterwards because the rally was triggered by some news event, right? People got very excited about Ape and then the insiders dumped very quickly. It's something that's not really surprising. This is an underperformance of 78%, and this is one sign of market inefficiency, right? If everybody is buying into a rally, despite the terrible tokenomics, that's an opportunity to make money. We're not buying Ape, we do the exact opposite. We are selling Ape that we don't have. We are shorting the Ape token. In other words, we make money whenever the price loses versus Bitcoin, Ethereum, Solana, the major cryptocurrencies that tend to appreciate over time. Now, Apecoin is just one example. The whole altcoin market has this problem, and the problem is massive. It's a structural problem that won't change anytime soon. Have a look at the value of the token unlocks of the newly hitting tokens that come to the market every single week. It tends to be at around 1 billion per week. $1 billion of tokens need to be purchased every single week just for the altcoin prices to stay flat. Now, the counter argument is that all cryptocurrencies are inflationary to a degree. Even Bitcoin is. But compare this with Bitcoin. Bitcoin's inflation rate is at 0.83%. And that is per year. The market cap of Bitcoin is 2.34 trillion. So when we multiply the numbers we've got potential sell pressure of 373 million per week. Roughly 1/3 of what the altcoins need to be bought at. So Bitcoin has less selling pressure, and at the same time we've got all of the supply absorption by the ETFs and by the Bitcoin treasury companies. And so when there's an asset that's less inflationary, that has less sell pressure, and at the same time has more buying pressure due to Wall Street, then of course that asset has to outperform. And historically we have exactly seen that. Since beginning of 2022 to today, the Bitcoin market cap relative to the others market cap, so the market cap of the smaller altcoins, has gone up by 291%. But this is actually underrepresenting the problem, because this is again just comparing market caps. But the prices tend to go down for the altcoins much faster because of the token dilution. So let's say we've got an altcoin of $1 billion of market cap. Now we double the amount of tokens, and thus the token price gets cut in half. The market cap would still be the same, right? The token price went down by 50%. The market cap is unchanged. So the underperformance that we get from the token dilution isn't even presented here in this chart. This chart just shows how long-term people are exiting the altcoin market in favor of, in this case, Bitcoin. But the chart relative to Ethereum and relative to Solana looks pretty much the same. Here's another example to show the difference between price and market cap. This here's WorldCoin. WorldCoin supply went from 522 million to currently 3.8 billion. So roughly a 7x in the supply in the span of just 2 years. The WorldCoin price is close to all-time lows. The WorldCoin market cap is quite close to all-time highs. It's not that close to the low. Again, the market cap can be rather stable while the price is crashing. Again, the market cap can be rather stable while the price is crashing. So really, you're getting the return of the price, not of the market cap. And that's why most retail investors lose over time. Have a look at Bitcoin relative to WorldCoin. It's just going up. Or have a look at Bitcoin relative to Ape. It's also just going up. And this is, I believe, the key to making money in crypto. It's to take advantage of that inefficiency. It's to make money with all of that marketing dollars that are spent by the team, by the early investors, to attract other retail investors to buy things like ApeCoin or WorldCoin. So then a lot of liquidity is in the token that then the insiders can dump on that liquidity. But we can make money from that dumping simply by betting on falling prices of ApeCoin or of WorldCoin, at the same time betting on rising prices of Bitcoin, Ethereum and Solana. So we're playing exactly the delta of those two assets. That's why we get this long-term appreciating trend. I just took those two examples over here, but again, this is a structural problem with the altcoins. The selling is much, much higher than the market can digest. It's even higher than what we have for Bitcoin, as we've already discussed. I'm making money with those relative valuation bets already for more than 4 years. And had I just dollar cost average into Bitcoin, I of course still would have made a lot of money, but because of the relative valuation bets, I didn't just get the return that's indicated here by the gray line, I got the return that's indicated by the black line. So this is something I'm doing already for a long time, quite successfully, quite consistently. And recently, I even started a capital pool for the premium members where I execute exactly that strategy. And so far, after 1 month of trading, this is already bringing us annualized 74%, very consistently with a maximum drawdown so far of 2.6%. So really, I don't think that the edge in the crypto market is to find the next 5 or 10x altcoin. I think the edge in the market is to simply continuously, quickly grow the capital with little volatility, but to use the market structure to our advantage. With a random meme coin gamble, we can only invest a few hundred, maybe a few $1,000s. But when we actually have consistent growth with not that much volatility, suddenly we can invest much more capital, right? Investing a lot of capital into Bitcoin feels much better than investing a lot of capital in a small meme coin, right? We can deploy more capital. Thus, even if we don't have 10x returns in the span of a few days, it doesn't matter. If we've got above average returns consistently, if we've got a high Sharpe ratio, we are okay. Now, unfortunately, due to extreme demand, I had to close deposits for the copy trading pool. There will be a new capital trading pool starting at the beginning of next year, but right now I simply trade with the capital that I got from the members. But you can still manually copy trade me. For example here, right? This was the WorldCoin short. I bet on falling prices of WorldCoin and on rising prices of Ethereum. That was on July 23rd. And so many premium members simply copy trade me, right? There is quite a lot of gains to be made in those individual transactions. But it's not about the individual transactions, right? It's about the long term. It seems like quite complex, right? We go long one thing, we go short the other thing. It also sounds quite risky. But really, in the end, if we set this up properly, it's not that risky and it's also not that complicated. There's really only two videos to watch. It's this one, using perpetual futures on Hyperliquid, and here this one, probably even more important, risk management with relative valuation bets. It's only 1 hour of content. After this 1 hour, you know exactly what to do in order to get performances like this. And you will also know what to do in order to just copy trade whatever I do, so that you get the same kind of returns that I do. So really, just watch this video and watch this video and you're good to go. I'm not going to read it out in this video, but feel free to stop the video and read the feedback that I get. It's always nice to get this kind of feedback. If for whatever reason you do not like premium, then just message me within the first 7 days of signing up and I refund you the fee. It's currently $125 per month. If you don't like it, you'll just get that money back. Just message me. A link to premium directly pops up over here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.